Before we start the panel, we have a new person here to introduce. So someone, well, a shared contact just introduced us recently. I was saying I was organizing this this summit, and it was about finance and agents and AI and those building those like financial systems. And also I said that I was doing my research PhD about ontologies, and then we realized that that you're building something that touches all of these points. So you have just come here recently from a different, you flew in from a different country. Maybe you can just tell people like, just maybe like a few minutes introduction about yourself, your background, your motivation, how you got it. Maybe we can give you 5 minutes to do that because you get to give a talk. So like a 5 minutes just introduction.
I talk fast. I don't need 5 minutes, but thank you for that. So I'm Andra. I'm a co-founder at a company called List Labs. The very short one-liner is we provide augmented data for Web3. So what we do is we take raw data, turn it into structured data, we contextualize it with knowledge graphs and ontologies, and then we augment it with OG RAGs, and we feed it to anyone who does automated execution, whether it's AI or bot builders, etc. I've been in crypto for about 8 years as an operator. More notably, I was head of growth at 1inch. I helped them raise about 275 million, and then I moved on to Origin Protocol, where I focused on institutional capital on chain into yield-bearing assets. And prior to crypto, I was in Silicon Valley, so basically like tech to Web3 sort of arc, as many do.
All right, so here's a generic question to anyone who will answer. So what is autonomous finance or agentic finance? I mean, so what does it mean today, and what could it become? Anyone that's like, it's an association exercise. How we associate autonomous finance or agentic finance?
Well, I guess these days it's very hard to know exact definitions of everything, so I'm going to try to be a bit subjective. Autonomous finance, I guess, in my view, has to do more with kind of robotic process automation. So just very kind of rule-based systems, very deterministic, highly controlled, doing segmented tasks. And the difference with agentic AI is that you are then developing an agent that is considering an environment, so a bit of the reinforcement learning in the concept within machine learning. There is always an agent and an environment, and the agent is posting an action in the environment and getting some sort of reward. So agentic AI is just really about reasoning and planning and creating all of these using automated processes, rule-based and everything, to create solutions that are more generic. So it's creating patterns, is acting, and it's really solving a problem for you, acting a bit more on the decision-making. While the other one is a bit more reactive, this one is very proactive and can think and plan and reason for you. So you can expect a good solution. So this is purely decision-making for you, while the other one is just decision support. So you are responsible, and this is very, very important for regulation as well, because decision support means that the client they just get the solution, the alert or the recommendation on their trades or whatever, but it's ultimately their decision to buy or sell or follow a particular alert or fraud recommendation. While the other one is actually finding the solution and acting on it, saying, yes, you have committed fraud, and then I'm going to kind of put you in jail, right? So that's kind of the difference that I see between the two.
Just to add to that, I think context matters. So if I look at financial services, where you would use agentic AI, so there would be some things that you would automate, which are more high frequency, low touch, less risky. And really a customer's not being able to see that. It's really behind the hood. And then there is stuff that you would co-pilot, where if I look at it, I used to head strategy and proposition for Standard Life, Phoenix Group, and we had hundreds of customer service agents. I don't think it is that futuristic. There'll be a time when there will be human agents and non-human agents, but you also will have super agents who will do things like quality control and supervise. So it really depends on context. And I think, the last statistics that I read, it's like 72% of financial services are in some shape or form using agentic AI. But that's, I think that number is really big, but that also includes the piloting, that includes small little robotic processing that someone's doing. But the use cases are quite manifold across. I don't know if you're the expert, you want to add something to that?
Yeah, I think what's interesting, at the moment we're looking very much at the agents doing things sort of defined by the existing roles and doing those things efficiently and more cheaply, etc. I think what's going to be really interesting is when the AI agents become more autonomous and start to define their own roles. And yeah, we're going to have a really exciting time ahead of us then.
I'll take the more degen take here, just because it's been a very serious day. So in crypto, we have this problem of too much being built. It's a wonderful problem to have. There's a lot being built at any point in time. Another decentralized exchange, another yield protocol, lending market, etc. It's hard to keep up with that. So one of the main use cases for agents right now are identifying those without putting in the work, right? It's impossible for us to keep up with like where is the best rate with the lowest slippage for a trade. Which decentralized exchange of the many is it today? It's impossible to know. So an agent could help with that. Same for yield. If I have stable coins and I want to get yield based on my risk preference, if I'm like low, medium, or high risk, then there's obviously like dozens of protocols that I could go to choose from. An agent could easily identify that based on your risk parameters and tell you, this is the best choice for you, and also dynamically rebalance your strategy based on the changing parameters that obviously always change at the back end in crypto. So I think that those are two obvious use cases on the consumer side. Then there's also, again, we said co-pilots. In crypto, we need research agents. So think ChatGPT, but for tokens, right? If you want to do research on chain right now, especially in an ecosystem like Solana, it's a very fast moving space. So you need to go to something like Dex Screener and then go to like, I don't know, GMGN or Axiom or somewhere else and switch back and forth between 10 different tools to get all the information you need, where you could just build a research agent where you could just do all this on-chain research in one place without having to shift back and forth and get it all in real time with like millisecond level latency. So those are just some like more tangible consumer use cases in crypto.
Since you, okay, so when you said this, I just thought that there are some use cases where we want to use like more deliberation, actually, and then it's like really like analyze lots of data, think hard to find like a commercially optimal decision. And there are some other situations when speed matters. So maybe you could just tell us about some use cases in both of these, like kind of the one where we have to they have to basically do things very fast.
Yeah, we have an interesting problem at the stage that we are with List Labs now. It's because we do two things well. We do really low latency. We can go down to like microsecond level for certain transactions, which is like the fastest you're going to get on chain, on par with like the top market makers in the space. But we can also go deep and wide. So we can do like really deep contextualized insights because of the knowledge graphs that are impossible to find with SQL backend. So, that unlocks a whole different type of research for asset managers or quants or anyone else that's interested in correlations and causations between data points on chain. So now do we optimize for speed? Who needs low latency? Well, agents. You need to know as soon as possible, as soon as anything changes on chain. So obviously any trading agents in particular need to have super fast data. Or do we go deep and we optimize? Because again, if you train an agent for speed, you're probably, by the time it takes to reason all that data, you're missing an edge, especially, let's take another degenerate case, meme coins, right? They change market cap within minutes sometimes. That's just how that space operates. It's pretty crazy, I know, but that's just what it is, right? It's kind of like gambling. So those that really want to know from 1 minute to another, all these insights, they need speed. That's like, again, a very tangible, but you can make millions of dollars, right, doing this. And then the other one is, like I said, asset managers that take longer term bets, or even like mid-frequency hedge funds that, they take weeks or even months to develop a thesis, but they need to have all this data in order to place a bet on whatever it is. So very different styles, same technology, and now it's more like how do we package it and where do we want to take it? At least that's on our side.
So what are the biggest bottlenecks for preventing agents from managing real money at scale? Because we're looking more like, so is it trust, regulation, infrastructure, technology, or something else?
I could go first. It's all of those, is the short answer. I think there is, so if you look at where agents are being deployed, right? Ultimately, everything has to come into fold. You need the technology to work. You need agents to be able to access information. I was chatting with a friend of mine who runs strategy for a large bank, won't mention which bank, but their problem, they wanted to roll out agentic AI on a very specific use case, and that's to do with non-durable forwards, and that's big business for that particular bank. And the issue there was the data, where the data was sitting, the agents couldn't access the data, and compliance wouldn't allow the agents to access the data. So sometimes, because I've kind of held a lot of strategy roles, and I follow what is called what needs to be true to deliver something. So often you need all those missing pieces to come into play to be able to deploy something. But essentially, it boils down to really the risk appetite of the activity that you're doing. And I think, to your point, what you need super fast, what is low risk. I see, analysts across financial services using it. Some who don't use it or don't say that they're using it are probably using it on the sly, which is a sad thing, because there are still some organizations which don't allow you to openly use it. But when will agents start transferring money in a large scale in financial services? We need the regulations to come up to the point, but I still think it will be the bank, it will be the individuals behind it who will be held responsible, because that's the way the regulatory environment is. I don't know if you want to add to that.
Wow, that was very good. I would, yes, I completely agree. So the data pipelines are a big challenge for banks and asset managers, because this data is typically, they have very large teams. The data is typically incomplete, incorrect, and it comes from several different sources. There is no standard formatting. Dates come on all sorts of shapes, and UK, Europe, US, all sorts of different formatting issues. So for them to utilize that data is very hard. Most of them are still using terminals, Bloomberg and the likes, where they just see the data and then they make the decisions. So it's very hard because they don't have those data pipelines. I think that's the great thing about fintechs, because, in our case, we do have all of the data, which we can then integrate with the client's data, and then the agents can learn and perform the scalable transactions. And to actually expand and grow this, it does require some kind of higher level decision makers, because those involved, portfolio managers, for instance, they do believe that their job is at risk, so that they're not very prone on accepting anything on the portfolio management side, like decision making using AI. And then they already have their dealing desks, and everything is well structured. It's very people-based, because asset managers are people-based, while they have to be data-centric. So they need to have the data at the center of the processes, and they need to integrate these processes. So this is something that is taking them years, but now it looks like they are now spending more efforts and resources in their data pipelines, and bringing the different teams, and trusting also to outsource these things, because this is not what they do best. Yeah, they communicate with their clients, they manage capital, they go and do their activities with their clients. So client attention is what they should be focusing on, but also they should be outsourcing some of these things to those that can do those matters better. And I think there's a lot more on service providing, but there's a ton of regulation on how to manage service providers as well, which brings a lot of work to their sides, teams and teams, on just managing the service providers and all the procedures that they need to have. So there are a number of barriers to do this, but we're getting there. Yeah, we're certainly very, very close. We had a proof of concept project where we ran a fund with $120 million. For 18 months, it grew to $165 million, and all completely managed by the robots. And this is insurance capital from a large FTSE 100 insurance company. So they are very keen in learning and seeing the effect and the impact that these things have. And it really works at a fraction of the cost that they can establish these teams. And if they were going to launch a fund under those constraints, ESG, all sorts of sustainability embedded in portfolio management, risk, compliance, that is a massive expense for an asset manager. While using agentic AI, you can do it at a fraction of the cost, operationally super efficient, trading within milliseconds, and it's just, yeah, you can really almost compete with the big black rocks, which are now trading at a sub 1 basis point. So that they are subsidizing the asset management, charging nothing for it, because they just have the trillions and they have capital, yeah, to run. So it's a big competition. Everything is dominated by the US asset management companies, and sadly, passive is just really winning. So it's a big challenge. Yeah.
Amazing. Okay, so what happens when agents start transacting with each other at scale without human oversight? So are we prepared for agent-to-agent DeFi markets? Anyway.
Yeah, well, this is already possible. We have frameworks that allow us to do this. Agents are doing this, but this is going to be, I think this is going to be a massive change, and I don't think we are prepared for it. Yeah, it's going to be very disruptive.
I'll take the other side. We're very far from that. And what I mean by that is agents in DeFi, in particular, that was a question, are a joke today. If you look at the agent launchpads and the frameworks, they don't even allow for data ingestion. We have personality agents like virtuals. I saw it on one of the slides today. You mentioned virtuals. Yeah. We need to talk. And it is not a serious platform. How can you build an agent that does not allow, especially a financial agent, DeFi agent, that does not allow for real-time data ingestion? It is not an agent. It's a toy, right? It's you're making a statement, look, it's possible, but you're not there yet. And none of the frameworks today in crypto DeFi allow for real-time data ingestion. That's the problem that we had. We built our own framework to launch our agent just to prove that data is needed for agents. So first of all, we need to stop building things just to to make the token go up and just for showcasing. I guess that we were having a lot of fun in crypto, which is true. And we need to start getting a little bit more serious. Like you guys are talking about stuff that we're not thinking about at all. Compliance, regulation, we did not wake up. At least in the the DeFi side of things, that's not necessarily something that we spend a lot of time thinking. We just build it and then we kind of deal with the SEC afterwards, all right, whatever. Build first, apologize later, or something like that. And so yeah, I would say that we're quite far. And we need a lot of infrastructure, data pipelines. Also, literally, she said my pitch, data pipelines are inaccurate, inconsistent. Someone was building with Dune raw data, which has 15-minute latency. What? How can you build with that? So I would say that in theory, separate parts are being built, but for that agent-to-agent communication to happen and to be effective and to do what it's supposed to do, we're a little bit far.
For the builders and product developers, creators, are there some applications for where you would give them some inspiration, this is the type of this is where we need agents, some use cases you would like to point them to?
So problems are many, right? Okay, and I think you mentioned about BlackRock doing business at 1 basis points, right? So I want to bring the conversation back to, I know I sound like this ROI obsessed person, but essentially change happens when you can deploy resources towards it. And I'm just talking about financial services here, margins have only gone one way. It's like this, okay? And that's problematic because you look at what we call, the financial services advice gap in the UK that stands between 92 to 97%, no matter who you're asking. Essentially, it means most of the population cannot either access or afford advice. Okay. And then when you take product providers who need to work in margins of 1 or 3 basis points, there isn't really much wiggle room to do anything. So what can you build on? And I think where we are seeing changes is, and to your point about it being a very people-heavy industry, is we need to create operational efficiencies. See, there are only two ways to make money, right? You either sell more or you spend less. Okay, there is no third, fourth, fifth, sixth way of making money. And that is across no matter what business you're in. So I think where there will be deployment is on, especially in financial services, where there's these low risk transactions that can be automated, and there will be a lot of developers trying to solve that problem. I know people trying to solve advice, and people have been trying to solve advice for a very, very long time, but regulations need to come into play to be able to solve that. And very rightly, like you've said, unstructured data which is not even accurate. How do you, if that's what you're feeding in, how can you give output which you can stand by? And the other bit is explainability. Okay, so we can't go to a black box. I can't say why I refused credit to someone or why I gave credit to someone. I need to be able to explain that. And I am quietly hopeful because I see those possibilities today. I think model context protocols is going to allow more sort of simpler models to be able to deliver very, very good quality outputs, but it needs to be built.
Okay, I would just, a final question. Do you think we should have like a right to delegation, basically, like that if someone sells a financial product, say, okay, this is like too complicated, I'm gonna like delegate this to my agent, I'm gonna sleep like my agent who's gonna basically do this, like, should we? And now basically I'm asking this because financial institutions, they do everything to create these walls, like there's like endless layers, like prove that you're human. So they basically like the traditional financial system does everything to prevent this agent revolution, but it's good for the consumer because it will save us so much time. So how do you see this tension? That's the last question.
So I'm a firm believer in human intervention agents where it's like a mix of both, right? So going back to the example I gave, which is you have stable coins, you want to yield on them, something happens, the protocol crashes, what do you do? So the ideal scenario, I mean, in a perfect world, the agent would just like automatically rebalance on your behalf so you wouldn't have to like worry about it. But what if it goes haywire? What if it's not fine-tuned properly, whatever the case may be? This is where I believe in like real-time data so you get the signal as the moment something happens, ideally before, because now we have predictive analytics that can tell you before something happens, right? Or have some contingency plan where your funds get locked up in case something bad or protocol gets hacked. And then you decide, and then it comes up with a solution, and then you just approve it, right? So if it's just one click, especially when it comes to large amounts of money, I think that for smaller decisions, let it run. Like, don't bother with that. We want to like have fun with our kids, travel, go to concerts. We don't have time to approve the, like agent decisions all day long. But for the important stuff, like if we're talking like £100,000, dollars, or millions, right? Like you want to be in control of that. So at least that's how I envision the right mix of agent human sort of balance.
Sorry, just wanted, yeah, you're absolutely right. And I think the only thing to add to that is from an incumbent large organization's perspective, you would never be able to outsource accountability, okay? And that, therefore, is going to be the resistance to be able to actually have autonomous agents acting on high risk or anything which would be deemed to be what I call the Daily Mail test. You don't want large bank took away, didn't let a family pay for bread because, their card was blocked or something. So I think we have to figure out what those transactions are. I believe we're a long way where we would let that be automated, but along with that, you need regulations to catch up.
Yes, so on this topic, so we have the two approaches. So one is the fully autonomous, where all the decisions are being made, they are transacted, the signals, buy, sells, everything, all the way to reporting. And we have the human overlay, the approach where gives humans a bit more confidence, where there's a human on every step that needs to be approved or checked. So there are some smaller transactions that are automatically gone pre-approved into market, and others need approval. So, but again, we are humans, and we delay the processes. So we need to make sure that this human overlay is really fast. So we send all sorts of messages to our portfolio managers, and they approve immediately. They're definitely not going through every transaction in the order book, but they definitely approve, and you have that kind of human overlay on every step of the risk, compliance, decision-making, etc. So that is critical to give humans and regulators the confidence that they need. And however, you just need that one human with some redundancy. When they go on holidays, you have someone else, so there's always has to be two people, but that's all you need for every big step: order management system, portfolio management system, risk management system, etc. You just need two people, so at most 10 people around, as opposed to hundreds of people that have been running these processes. So that really facilitates reduces costs and increases operational efficiencies.
So I understand. Yeah, humans want to be involved in this process, and it's difficult for them to give up control. Which, in some ways, I mean, that's kind of what decentralization was all about: was moving control away from central authorities. And I think we're going to get to a situation where, yes, you want to have these two humans who are going to be saying we approve this, but then the things they're approving will be so complex that they will not really be able to understand what they're approving, and so they will be looking to AI to help them with that. So in the end, I think by default, it's just going to be completely autonomous, and I think that's what the future is going to be like.
Yeah, but what we do, for instance, is we filter things from order sizes. Order sizes, yes, larger to smaller, so the human can very quickly look at and assess whether there is an error just by a quick look. But yes, of course, yes.
All right, we thank our outstanding speakers and the panelists.